Yes people, what's happening guys? Welcome to The Value Investor. Today's video is going to be slightly different. Today's video we're going to be talking about option trading. What is option trading, you might ask? Well, there's plenty of videos on YouTube that can teach you the intricate details of what an option trader is. But as the video goes along, I'll be explaining the basics. Now, I've only been doing this for 2 weeks. That's right, 2 weeks. And I wish I'd have learned how to option trade a year ago, 2 years ago, 3 years ago, because I would be very wealthy now. But you know, it's never too late to learn. So as I said, I've been doing this for 2 weeks, and my first week I traded Intel and Neo, the bottom two here. 16th of July was my very first option trade, and the 23rd of July, that same week. And on that same week, that first week, I made £178, and it was just crazy. I just made, there's no risk, and I'll explain what the main risks are, but there's no realistic risks. Now, if that doesn't make sense, you know, I'm going to get into it, don't worry, because everyone will be like, what? There's always a risk. What? There's got to be a risk, but you know, just listen to what I've got to say, okay? Over the 2 weeks, if you see here, profit loss year to date, over 2 weeks, that's how much I've made. And as I said, the first week I made £178. So my second week, which was last week, I made over £1,000, which is just absolutely mental. And the capital I'm using is just over £52,000 here. This is all in dollars actually, so $52,000. But you know, if I say pounds, it doesn't really matter. So I'm gonna give you the basics of what option trading is. The first basic is called selling puts. Okay, so it basically means I'm selling the right for someone to put stock in my hand. Okay, now let's just use the example of Apple. Ticker symbol Apple, everyone knows what Apple is. Here is the price of Apple, $145.86. So that's the price of Apple. If you turn around and say, for example, I want to invest in Apple, I want to go out and buy an Apple share, you can go ahead and just go and buy an Apple share, or you can sell puts on Apple. Okay, and I'm going to explain what selling puts is. So you have days here. You can make the trade over a certain amount of days, but I like to make weekly trades. Okay, so there's weekly. Today's a Monday, and the weekly trades, every trade ends on a Friday. Okay, so if you were to make a weekly trade on the Monday, which is today, it will end this Friday. If you were to make a 2 weekly trade, it will end 2 weeks on Friday, 11 days from now, basically. Okay, so not this Friday, the Friday after, and so on. You can make yearly trades as well, but I like to make weekly trades because I like to be involved. If people don't have much time in it, you can make your trade, for example, for a month here, and just forget about it, and then at the end of the month just come back to it and see how much you've made. But let's just concentrate on the weeklies, because that's what I do. So if I open a weekly trade, okay, on this side you have puts, and on that side you have calls. We're just going to concentrate on this side here, the put side. So I'm going to sell puts on Apple. So I'm going to sell someone the right to put Apple in my hands, and for that right I get paid a premium. Okay, so this is made up of premiums. Now I'm going to explain what that is. Okay, so this line here, this browny orange line, goes right through. That depicts this price, $145.86. So right, that line is the price of Apple. Okay, if I want to buy Apple, I can buy Apple, but I could turn around and go, but I want to buy Apple at $140. I don't want to buy Apple at $145. So I can go down here to $140 and I'm being offered 24 cents, or let's just say 24 pence per share in premium to open this trade. Okay, now every time I open a trade, one trade or one contract is 100 shares of Apple or whatever stock it is you're buying. You can't buy one, you can't buy two, you can't buy 20. It's got to be 100. Okay, so if I say I want to buy, I can choose $144 if I want. The higher I get, the higher the premium. So I'm being offered 85 cents here per share. Obviously times 100. If I click on it, okay, I'm being offered $85 just for the hope to buy Apple at $144. Okay, even though the price is there, and it's costing me over $14,000 because it's, remember, it's times 100. Okay, it says here maximum loss, and I know I said before there's no risk. They have to put maximum loss here because there's always a chance that a company can go bankrupt. So if I invest in Apple, if I invest $14,000 in Apple, and this week Apple announced that they're going bankrupt, I lose my money, obviously. But we all know Apple aren't going to go bankrupt this week, probably never, but they have to put maximum loss here just in case. So the realistic risk there is I have to buy 100 shares of Apple at $144. But that's okay, because I wanted to buy Apple anyway. Okay, I'm willing to buy Apple at $146. I'm even happier buying $144, and I'm being paid $85 for doing that trade. Okay, so this contract will end on Friday this week because I've took out the weekly option. Okay, now by the end of the week on Friday, on trading close, if the price of Apple is above $144, I don't have to buy Apple. So I don't have to spend $14,000 on Apple. Okay? So if the price goes up, so if it goes up to 150, I don't have to buy it. The contract is basically cancelled. However, I still get the £85 for opening the initial contract. I get this number here regardless, no matter what the outcome. Okay? Now, however, the slight risk is this week, because I'm opening a weekly trade, if the price falls from $146 to $140, I still have to buy Apple at $144. Okay? But again, that's okay. I want to buy Apple anyway, right? And over time, Apple is going up. So again, if by Friday close of trading, even if they come out with the worst news possible, I don't know what the worst news possible could be. Maybe they say we're not doing iPhones anymore. But whatever bad news they put out, and which causes the stock to crash, it could even fall down to $50. I still have to buy 100 shares of Apple at $144. Okay, so that's the slight risk. So what you want, the trick is, you want to be buying companies that you love, that you want to hold. For worst case scenario, you need to hold for a long time. Okay, so I've got a list of companies here that I have on my radar that I would like to trade. And a trade that I'm actually going to do this week, let me just clear this here, is Alibaba. Now, the more volatile the stock, the higher the premiums. Okay, obviously because there's more risk. So if I open the 4-day chart, a 4-day option for Alibaba, which is trading at $195, see the line going right through, $195. Now, you see the yearly chart of Alibaba, the high was $310. That's this year. and we're all the way down to just under $200. Now, Alibaba is a fantastic company, okay? There's a slight risk because it's a Chinese company, and the Chinese and the American government are arguing like petty neighbours, but that's why the stock's crashed, and it's at a fantastic value at the moment. And this week I'm going to sell puts of Alibaba, okay? So I'm happy buying Alibaba at $195. Even if the stock falls to $180 this week, I don't mind, because look at the upside, and it's going to hit there at some point. So I'm happy buying Alibaba at $195. So if I opened up this premium, look, I've been offered $4.80. So if I touch it, remember it's times 100. So I've been offered $4.80 per share to open this contract. So that's the premium I'll receive this week, okay, with £19,000 capital. So I'm going to buy I'm going to open a contract to have the right to buy Alibaba at $195, which will cost me $19,000. Obviously, because they've took away the premium as well. So realistically, I'm buying Alibaba at $190, because $195 take away basically $500 is the price, right? Are you following me? I'm not the best of explaining things, but hopefully you're understanding the principle of what I'm saying. So I'm going to open a contract today at 2:30 when the market opens for the option to buy Alibaba at $195, okay? And I'll receive immediately in my account here $480. Now that's $19,000 took away from my capital, okay? So I'm still left with what, $30-something thousand to play with. So just off Alibaba I'm going to make just under $500. I'm also going to open a contract with Apple. I'm going to open one contract at $145, and that's what I'm being offered, $121 just to open that contract. Now again, I don't mind being assigned these shares, and I'll tell you what you can do. If you do get assigned these shares, you can just make more money, okay? I'm just concentrating on selling puts, and I'll explain what selling calls is, okay? I'm also going to make the trade of Intel. If I can just find Intel. There it is. So I'm going to open a weekly trade for Intel. Now again, because it's less volatile and it's a sturdy company, the premiums aren't the best, and I'm happy at buying Intel at $53. This is a cheap price for Intel. It's undervalued at the moment, so I'm happy owning Intel. Worst case scenario, if I get assigned the stocks. Okay, so if I open up, I'm being offered 65 cents per share, which is $65, and the collateral is just under $5,300. So I'm going to open that. I'm also going to open a contract with Neo, and the premiums are quite high on Neo because it's quite a volatile stock, and I'm happy at buying Neo at $44. It's trading just over $44, but I'm happy buying it, and I'm being offered $125. I'll receive that immediately and it's just going to cost me $4,000. I'm also going to do the same with Virgin Galactic, okay? So after I've opened all those contracts, this week in premiums, I will receive $1,059. I've worked it out. Just saves me working it out on camera. But I've worked it out, $1,059 in premiums. Okay, that's what I'm going to receive. So this week I'm going to earn £1,000 basically on selling puts. Okay. Now let's talk about the realistic worst case scenario. Let's look at Neo for example. Let's just say I open a contract at $44 with Neo. Okay, I received a premium. Now this 4,275 gets set aside by the broker. I'm using Tastyworks at the moment. Tastyworks will set aside this amount and they will hold it until Friday close. Now if the price falls to $43 by Friday close, this money doesn't disappear. I actually own Neo stock, 100 shares of Neo stock, okay? Now I'm holding 100 shares of Neo stock. What do I do with this? Well, I can do whatever I want with it. I can hold it for years and years to come and just hope the price goes up. Or I can sell calls on Neo. Let me show you exactly what that means. So let's just say by Friday close, this Friday, I'm assigned 100 shares of Neo, which has cost me $4,275, okay? So a week today, the weekend's over, Monday comes, a week today on Monday, I own 100 shares of Neo. I will now sell calls on Neo. So I'm selling, it's not that I'm selling Neo, I'm selling the right for someone to buy Neo off me, okay? So remember, I bought Neo for $44 a week earlier. Now these are the premiums I'm being offered. So I've bought it for $44. I'm willing to give someone the option to buy it off me at $46 by the end of the week, okay? And I'm being offered $1.03 per share. So I'm being offered $103 in premium for someone to buy Neo off me for $46. Now remember, I bought it for $44, so I'll also receive, if worst case scenario, because I'd like to hold Neo, if worst case scenario, by the end of the week, the price of Neo hits $47, I still have to sell it for $46. But I make money off the premium, $100, and I also make money on the capital I've earned, which is $2 per share. Because remember, I bought it at 44, I'm going to sell it at 46, so I'm going to make $2 per share times 100, $400 on this trade. So in total, worst case scenario, I have to sell Neo at $46 by the end of the week. I'll have made $400 on the capital appreciation and $103, so $503 in this trade, just this one trade. And I'll be doing that with Apple, Alibaba, Virgin Galactic. If I get assigned them stocks, I'll sell calls on them, hoping that they don't sell, so I can do exactly the same again the week after. The money to be earned is just unbelievable. You know, I'm working off a capital of $52,000. Imagine I had $100,000. Let me just show you an example what $100,000. If I sold puts on Neo at $44, remember, one contract is 100. Each time I go up, see that number there, that's 2 contracts. Go up again, that's 3 contracts, and each time I go up, my collateral goes up, my premiums go up. So another, let's just say I had $100,000 to spend on Neo. See, in a week, if I had $100,000, I could make $3,000 in premium on Neo. And remember, which would give me 2,400 shares of Neo. And remember, if I get assigned those shares, I could just sell calls on them as well. So let's see, 2,400 shares. Let's just say I own Neo and I'm willing to sell them at 46. Let's get 24 contracts up, which is 2,500. I'll make $2,500 the following week just selling calls on Neo, plus the appreciation. So there's so much money you can make on selling puts and selling options, basically option trading. And as I said, the only risk there is if the company goes bankrupt, you lose all your money. That's why you choose companies that are not going to go bankrupt, okay? Worst case scenario is if you sell puts at $44, for example, NEO, and in that week the price falls all the way down, let's just say $10, for example. Okay, you still have to buy them at $44, but you can still sell calls on them, so it's irrelevant. It doesn't matter. You own a good company. Even if you're stuck with them for a year or two, you can make money selling calls on your position in NEO. So the biggest tip I can give you is trade companies that you don't mind owning. Because realistically, if I sell puts on NEO at $44, ideally by Friday close, I would like NEO to be up here. I don't really want to own NEO. All I'm interested in is the premium. Okay? So if the price ends up over $44, then great, I got a $325. Then I'll repeat the process the week after. And if I don't get assigned them, great, I'll repeat the process the week after and just keep collecting these premiums. And again, as I said, if you do get assigned the stock, you sell calls on them and you just repeat the process until your money just keeps going up and up and up. And this is, as I said, this is what I've made in 2 weeks, and I'm looking to make another £1,000 this week in selling puts on the stocks that I've just told you: Apple, Alibaba, Intel, and Virgin Galactic, and NEO. So I hope you enjoyed the video. I'm still purchasing valued stocks. Don't do this on stocks that are overvalued. There's a lot of stocks here that I have that are speculative stocks, like Skills, Tilray, Rocket, Tattooed Chef, Palantir. These are all, the premiums are quite good, but they're not well established companies, and these have more chance of either going bankrupt or just totally crashing. So that's why you picture the companies that are well established. The more expensive companies, the premium mightn't be as attractive, but you can still make a heck of a lot of money by trading these options. If I show you Tesla is just crazy. If I go on the 4-day option for Tesla, that's the price of Tesla at the moment, $487. If I'm happy, if I want to buy Tesla at $680 and click on it, look what they're offering me. I'm being paid to buy Tesla cheaper than it is today. It's just crazy. Imagine I had a lot of money. Imagine I had £1 million. I wanted to buy £1 million worth of Tesla. In a week, I could make $18,000. And as I said, worst case scenario, you get assigned them stocks. You own Tesla. So if I owned Tesla at this price, I could sell calls at $695. Look what I'm being offered. Just for giving someone the right to buy Tesla off me for more than what I've purchased it. It's just I just wish I'd have learned this years ago. But as I said, it's still not too late to learn. Any questions? If I haven't explained anything correctly, just let me know and I'll try and explain better in the comments. And each week I'm going to do a video of the money that I've been earning. If I go on my activity, the bottom two rows are my first week, and the top 1, 2, 3, 4, 5, 6 rows of what I did last week. Last week I made just over $1,000 by trading Intel, NEO, Virgin Galactic, and Lucid, and these are the premiums that I received by trading them. Remember, this is times, on Lucid this is times 600. On Virgin Galactic, it's 64 cents times 9 contracts, which is 900. I did a NEO contract of 7 contracts, but I got out of it midweek, and I was initially offered 45 cents for NEO, but because I cancelled the contract halfway through the week, it went down to 38. So I still got 700 times 38 cents. And also, if you see here PPPPP, that means selling puts. As soon as you see the letter C, that means I was selling calls. So my very first week I was assigned 200 shares of Intel, which is great. I love Intel. I want to own Intel. I get a dividend by owning it. And the week later I sold calls here at $53.50. Remember, I bought it here at $53, and a week later I actually wanted to keep the shares, and I should have made this maybe $55 or $54, and I would have kept the shares but received a premium. However, believe it or not, the shares went up to exactly on Friday $53.50, which means I had to sell the shares. So I made the premium 200 times 55 cents, and I also made the difference, which was 50 cents times 100. So I made capital appreciation there, so it was a pretty good week. But again, you want to do it with companies you don't mind holding, okay? And that's why I'm trading companies that I love, I respect. You do your own research, make sure that the heads stay, the free cash flow is great, you've got plenty of money on hand, etc, etc. And yeah, guys, I hope you like the video. Tell me what companies you think I should be trading options in, and let me know what you think of the video. Hope you enjoyed it. Thanks, guys, and I'll see you again this time next week, and I'll let you know the trades, how they got on, and the trades I'll be doing for the week following. Thanks, guys, take care, bye.